This is Carolyn Boroden's trading bio. So Carolyn Boroden is a technical analyst specializing in Fibonacci analysis. Her unique form of price action and time analysis is quickly proving to be one of the most promising trading techniques using Fibonacci available today. Miss Boroden's first book, Fibonacci Trading: How to Master the Time and Price Advantage, was published by MC Grohill in early 2008. She's currently running a live trading room at ElliotWaveTrader.net. That's www.ElliotWaveTrader.net. And Caroline has been trading since she was a teenager to date, and has for trading decades. So welcome to our webinar. This is Carolyn Boroden's trading bio. So Carolyn Boroden is a technical analyst specializing in Fibonacci analysis. Her unique form of price action and time analysis is quickly proving to be one of the most promising trading techniques using Fibonacci available today. Miss Boroden's first book, Fibonacci Trading: How to Master the Time and Price Advantage, was published by MC Grohill in early 2008. She's currently running a live trading room at ElliotWaveTrader.net. That's www.ElliotWaveTrader.net. And Caroline has been trading since she was a teenager to date, and has for trading decades. So welcome to our webinar.
So guys, we're talking about Fibonacci trading with the Fibonacci Queen herself, Carolyn Boroden. And it's truly an honor to have her on our trading lounge. So we'll go ahead and she'll share with us her presentation for today.
Okay, so it sounds like the sound is good, but let me put on the share so we can get the right screen going. All right, you should be able to see my screen, right? Advanced Fibonacci time and price analysis.
Yeah, we can see your screen.
All right, so let's get started. Okay, great. So why would anybody use this type of Fibonacci analysis? Well, it's because it enables you to identify high price, relatively low risk trade setups where the risk is clearly defined along with the targets. Now, this method works on any time frame and essentially any good market data. The only charts that don't work well with this would be maybe, a penny stock or something that, only has a couple of days data. Then you would really only be able to do analysis like on a minute chart or something like that. And that's not very helpful. But for the most part, anything that has good data, you can use this analysis on. Now, I've applied this method to stocks, ETFs, futures, and the Forex markets, but I also have applied it to crypto, and it works very well on some of those. I mean, I look at Bitcoin and Ethereum. It works pretty well. It's also an excellent methodology to use with option strategies. Okay, I used to work with a group that really only did options, but options is a good way to use this work. And also, you can see things in the market using this analysis that you will never, ever see just using indicators alone. All right, so let's take a look at, this is just a little bit of a background on the Fibonacci numbers. We're not actually using the Fibonacci numbers to do the analysis. We're going to use the ratios derived from the number series. But what you want to see about this number series is basically where the golden ratio is inside of here. And it's basically, well, the number series, you're going to get the next number in the series by adding the two priors. So here, for example, 2 plus 3 equals the next number, which is 5, or 5 plus 8 equals 13, and so on. But what's important is what is in between these numbers, okay? And it's basically the golden ratio. So, for example, if you take 21, which is one of the Fibonacci numbers, multiply it by the golden ratio, it gives you the next number. Pretty much 33.978 is essentially 34. Or you do the same thing with 34 times 1618, and you'll get pretty much the 55, which is the next number here. Also 55 times 1618, it's pretty much 89. So basically inside of these numbers is the ratio of 1618, or the golden ratio. It's in between there. All right, let's take a look at the actual ratios that I use that are derived from the number series. I mean, I told you that where the 1618 comes from, but all these other ratios are related mathematically. But the ones I use every day: 382, 50%, 618, 786, 100%, 1.272, and 1618. Occasionally, for a very large swing, I will use 236 as a retracement. 2618 will be a third extension that I will use because it will be my target number 3 for any trend trade setups. And then once in a blue moon, I will use this 4.236 if I have a runaway market. But I mean, I barely use it. If I use it once a year, that would be, yeah, I mean, it's just not used that often. But if you see a runaway market, you can try to apply that one and see where it is. Okay, now I showed you where, the 1618 came in from in between the number series and the inverse of that, 618. So what about the other ratios though? So like I said, they were mathematically connected. So 1 minus the 618 gives you the 382 that we use, or for example, square root of 618 equals 786. Square root of 1618 is 1.272, and so on. But you'll check these and you'll see that they're all mathematically related. Okay, and started with the golden ratio. All right, so I imagine that many of you are familiar with at least the basic Fibonacci price retracements, but I'm going to show you what they are. And here, retracements, basically for possible support, I run low to high swings using the retracement ratios, 382, 50%, 618, and 786. And I will look for possible support wherever these levels come in. Or we take a prior high to low swing, use those same ratios, and look for potential resistance. Okay, so it's as simple as that. We're going to get a little bit more complicated, but let's just start with the easy stuff first. This is an example of a retracement. So this is a daily chart of square. Here's where I took a prior low to high swing. Here's the ratios. And again, we're going to look for possible reversals around the areas of the retracements. Now, you're not always going to get a change, okay? But there's a way that we know how to focus on, one area over the other, which we'll get into as we move further through this presentation. But here, for example, we didn't really get a reversal until we got to that 618 retracement, and then you saw a nice turn in the market. Another example on the flip side, this is a 30-minute chart of AMAT stock where I measured a high to low. And you can see, well, we did get a reaction at the 382, got a micro reaction at the 50%, and here you got a more of a major turn at the 618 retracement. So again, we're watching the potential support or resistance, but resistance in this case, since we measured a high to a low. So those are the basics on retracements. Now, extensions are essentially retracements beyond 100%. So for price extensions, you're measuring a prior low to high, but extending beyond the 100% using the ratios of 1272 and 1618, and then sometimes that 2618 for, my target number 3 on the setups. But we're just using 2 points. We'll use these ratios and we'll look for possible support if you're running a low to a high, possible resistance if you're running a high to a low, when you get to those extension levels. So here's a couple of examples of that. This is a daily chart of Facebook. And we actually have 2 examples on the same chart. Here's where I took a prior high to low swing, and you had the 1272 and then the 1618. In this case, the 1272, basically, you got a healthy reaction twice when it tested that area. You didn't get any reaction when you tested the 1618. Okay, but then here's another example on the same chart, another high to low. Didn't really see a reaction at the 1272, but you did see a healthy pullback of over $15 from the 1618 extension. So again, it's possible support or resistance decisions that you want to watch. Let's take a look at, here's another example of an extension. This is a daily chart of Intel stock. Here's where I measured a prior high to low swing. And the 1272 market didn't really do anything, but we hit the 1618. And in this case, it was an exact hit. Okay, you don't want to look for exact hits or trying to be a perfectionist. As long as it's close to one of these areas, it's worth looking at as far as a market decision. But in some cases, it will be exact. So 50.85, and here the actual high was 50.85. And then we did see a healthy pullback of $5 and looks like 80 cents from there. Okay, so that's another extension example. One more. This was on a weekly chart. It's a pretty old chart, but again, if the market's going straight down like it was in this stock, this was CMG, you want to look at the bigger picture and see where some of these extensions or price relationships may come in. And in this case, we didn't really see anything at the area of the 1272 extension, but we did have an extension at 262.71. Actual low was made at 263. Again, not perfect, but absolutely close enough. And from there, doesn't look like it's much of a rally, but this was $82.88 from this extension. So it's always worth knowing, where these zones are. All right, so that's price extensions. The third type of price relationship that I use, because we looked at retracements and we looked at extensions, but the third type is called the Fibonacci price projection. At least that's what I call it. Some of the programs will say to use the three-pointed tool, which is called an extension tool on their program. It doesn't matter what the tool is called. It matters that you use 3 points on the chart to get the results. And here's where I'm looking for possible resistance by comparing a low to high swings projected from another low, always using 100% and sometimes 1.618, or a high to a low projected from another high using these same ratios. Again, looking for possible support, when you're coming from a high, low, and then from another high. So again, all of these are set up for possible support or resistance. It's when everything comes together when it becomes pretty magical. But let's go over some projection examples before we get into the fun stuff. This is a daily chart of crude oil. And this is an example of a price projection where we're comparing swings in the same direction. This was a decline of $3.12 from this high to low. I projected that from the next high to look for possible support. Gave us 55.87. Actual low was made at 55.88. So this was within a penny. So we had, another swing that was $3.11. So these were very similar. This is what I call symmetry. When you use a 100% projection, we're looking at similarity or equality when comparing swings in the same direction. And in this case, it was, very, very similar. And also a beautiful rally ended up starting from this area of support, symmetry support. Here's another example of using a projection using 3 points. I measured a prior low to high swing, ran the 100% projection, but we blew through this. We didn't even really stall. We kind of gapped through that. But then we also ran the 1618 projection, from the same point. Okay, so low, high from this low. And the 1618 projection came in at 1097.88. Actual high was 1097.51. Absolutely close enough. And then you can see where it started to pull back. So this is why we want to know where these levels come in, because often they will produce a change. Not 100% of the time, though. Here's another example of a projection. This is the 30-minute chart of S&P futures. This is where, you had an overall downtrend pattern of general pattern of lower lows and lower highs. So we wanted to look at the sell side. And what we did here is we would take, the prior rally swings and then project them from any new low, because that may offer resistance. And in this case, we had a 91-point rally from low to high here, projected that from this low, which gave us 30.97. Actual high was made at 30.96.25. So, within ticks, basically this was 91-point rally. This was 90.25 points. So we're off by 3 ticks. So again, we're looking for possible resistance. It did end up failing here and had a very healthy decline after just that simple symmetry. And one of the things you have to remember about this is only 3 clicks of a mouse. Click, 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 gave you this. Okay, so 3 clicks gave you something that indicated an area of possible resistance before it declined 243 points in the S&P. Okay, it's worth watching. Then we have, let's see, here's an example on Bitcoin. This is where, I saw some pretty large swings, so I started comparing them to each other. And I think I ran, this low to high, I projected it from here, and then I ran this low to high and projected it from here. One came in obviously a lot higher, but this is the one that was very similar to this swing. So this was 157.50, this is 158.35, gave us potential resistance at 651.15, actual high was 652 even, absolutely close enough. But what we knew was that this was possible resistance, and it did drop 12,000 bucks from what? A couple of clicks of the mouse, right? So that's another projection example. And then we're going to move into one of the most powerful setups that I use every single day, and it's called the Fibonacci price cluster. The definition is the coincidence of at least 3 Fibonacci price relationships that come together within a relatively tight range. And now we're going to start with a blank chart. So this is a daily chart of Tesla. And I'm going to ask you, what would have told you to look at a buy in Tesla right around here before it had this gorgeous rally? Why was the June 11th low important? And it's basically a trick question because I don't expect, anybody to get the answer I'm looking for. Some of you have seen a presentation like this before may know, but I'm going to show you what told you to look for a buy. Okay, so here, what we're doing is we're putting together all of those price relationships, projections, retracements, and extensions. The first chart shows a projection of a prior high to low of $19.81, projected from another high, gave us 167.07. Okay, that's one reason. Then we have another projection on the same chart, high to low, $31.90, projected from here, gave us possible support, 166.97. So that was another reason why we'd look for support. Then we have a minor extension on the same chart, still the Tesla chart, low to high, extended 1618, 167.43. So that's 3 price relationships so far. And then here's another one. We have a 1272 extension of a low to high swing that gave us 167.23. So now we have 4 price relationships. And then here's the result. We have a cluster, okay? It's a cluster of 4 price relationships. We have 2 100% projections, this one and that one. We have a 1618 extension. I believe it was this low to high. We have 1272 extension, that low to high. It gave us a price cluster at 166.97 and 167.43. It hit, it held, it triggered, and it was followed by a rally of 103.59. Okay, it was a beautiful rally. And that was just starting with a blank chart and what you can do with it. Because this wasn't just 1 price relationship, it was 4. I need the minimum of 3 to call it a cluster. But this is one of the setups we look at every single day. Now, what we do with that information is we say, well, if there's support, this is where the support was here. I want to go down to a lower time frame chart, and I want to look for a reversal signal to tell me that it's worth placing a bet against that support. So in this case, I use the 834 EMA crossover, and this was a 15-minute chart. You want to go down to a lower time frame chart because you want it to trigger relatively close to where your definition of risk is, which is below that support that I made on the chart, right? So here is the moving average crossover, 834 EMA cross to the upside. And I also like to see it take out a prior swing high, which is basically the price action we want to see. We want to see it go from, see, this was basically a small pattern of lower lows and lower highs. But if we took out a prior swing high, then that's the first indication that we might shift gears and go to higher highs and higher lows instead, which is what happened in this case. And what was your risk at that point? It was just underneath here. The potential reward was extremely healthy. So risk reward in these trade setups, that's another plus. Here's another example of after that initial Tesla trade. I mean, you don't always get the first cluster, right? We'll keep on setting it up on lower time frame charts and also the daily. But in this case, I found two symmetry projections and a 618 retracement of the prior swing, gave you a secondary entry at 175.82 to 177.37. You had 200% projections and a 618 retracement. It pulled back into it. It triggered again. And then in this case, it was a rally of 94.08 if you used this entry. All right, let's see what else we have. More examples. This was not that long ago in the gold market. Now, overall, we started seeing a shift to higher highs and higher lows once we took out this high here in gold. So one of the things that we wanted to do is look at the pullbacks for new buy entries. In this case, I had a prior high to low projected from the next high. So I've got that 100% projection. I had a 786 retracement of the small swing, low to high, 786. And then also a 382 retracement of a larger swing. It all came together, 2756.40, 2759. Actual low was made at 2760, 20. Okay. And again, it wasn't a perfect hit, but you can see how similar these swings were because this decline, 62.20, this decline, 61.90, plus you had the other couple of price relationships. So it hit, it held, it triggered, and from that low, that was a rally of 213.80. Okay, and then there were also other entries on the way up too. Okay, I'm just showing you the one example on this chart. All right, here's an example in the TLT. Here, I had three price relationships come together. We had one retracement of the low to the high, 618, came in at 86.91. Then I also had a, let's see, where's this other one come in? Well, then we had a 100% projection, prior high to low, 339, projected from this high. Okay, this ended up being similar at 331. And then we also had a 1272 extension of this low to high. And that came in at 86.68. So we had three levels, a 618, a 100% projection, and a 1272 extension. It hit, it held. It might not have been a graceful entry because it looks like there was a gap after this, but it's still a good example of a cluster that did trigger, but it also gave you a chance on a pullback to get back in. Okay, so let's say that this wasn't a graceful entry. Once you got the pullback, you know that this was a key support decision. You could buy the pullback and then place the stop underneath here. And there was a rally so far on this one of $4.64. Okay, another example of a cluster. This is in IWM. This is a daily chart. This is where it took prior high to low and a prior high to low, and I projected both of those from this high and know that they were similar. $5.28, $5.55. This one was similar at $5.39. Then we also had a retracement, low to high, 618, and then also a 786 of this smaller swing. Okay, so I had four price relationships. I had a price cluster. Now the cluster can be three retracements, it could be three extensions, or it could be just a mix of the three different types of price relationships like it is here. Okay, and in here we met two targets on the upside. So that was followed by a rally of $9.14, and your risk is here. So the risk, like let's say you're getting triggered maybe around here, and your risk is to underneath here versus the potential reward, because we look at 1272 and 1618 as our first upside targets, is typically very good with these setups. All right, let's see what else we have. I did have a daily setup in Netflix a while back, and this is where the daily stuff showed up. But I want you to know that you can also use these daily levels for day trade entries. So the next chart shows you, this is where it put in a low right at that support. And this is actually a 1-minute chart in Netflix. So here you had the moving average crossover. Here you took out the prior swing high. So once both of those occurred, you had the buy trigger. Your risk was just underneath here, which is not huge because, you know, you're using a 1 minute, a teeny chart to get in. And it was a very, very healthy rally that followed for day trade off of a daily chart. Here's another example. This was in JPM. Here's where I had found symmetry. Again, I took a prior high to low, projected it from this high at that time. Had another high to low, projected that from here. I had a, oh wait, this is, okay. I had a retracement low to high, 382 came in. Then there was another retracement. This is a low to a high, 786 retracement. And then there was also an extension, a low to a high, and I believe this was a 1618 extension. Gave us a cluster of 226.69 to 230.09. Now, if you wanted to break it down into two smaller zones, you could, because then this smaller zone by itself was 228.96 to 230.09. Actual low was made at 229.53, which was directly within this zone. It hit, it held, it triggered, it met two targets on the upside. It had a rally of $50.72 off of what? A Fibonacci price cluster, where the definition of risk is clear and your potential targets are also clear. Now, I only use 1272 and 1618 if it's a trend trade as far as targets. If it is a counter trend trade, then I typically look at the, the resistance and projections for possible failures. This next chart is an example of S&P cash, but it's showing you that we had a very healthy price cluster of resistance here. But when something blows through a price cluster, it also tells you something. And in this case, it basically blew through the resistance and we had an acceleration to the upside instead. Okay, so a break of a zone also tells you something about the market. Now, I'm going to finish up with timing. What about Fibonacci timing? I use the same ratios that we use on the price axis of the market on the time axis of the market. And with timing, we're basically like measuring, for example, we'll measure the time between a prior high to high swing and then multiply that time by the ratios, the same ratios we use for the price work, and project the results in the future. When we see time clusters, 3 or more timing projections, we look for a possible change in trend. Also, when time and price come together with a setup, we have a much higher probability trade setup. So I'm going to show you a little bit about the timing that we use. So the outright timing cycles, which you can find like on Thinkorswim if you use that, it's not as neat as, the software program I use is Dynamic Trader. It was created by my mentor, Robert Miner, and I don't use anything else. But here, we had a setup in Facebook a while back where it was pulling back into a beautiful price cluster of support, but we also had timing because I measured high to a high, and we had 618 in time on July 19th. I measured a low to a high, 100% in time came in July 20th. I measured a low to low, 1618 in time came in July 19th. And I had another low to low cycle, 786 in time, July 21st. So I had cycles between the 19th through the 21st. With cycles, you look at whatever the market's doing into the cycles and you look for a reversal of that. So since we were going straight down into the cycles, we were anticipating a possible reversal back to the upside, which was also suggested by this support cluster. So we had time and price come together, beautiful rally, $43.05, met 2 targets on the upside. And, timing is also helpful, especially when it matches up with the price work. Here's a recent example that, if you've seen any of my stuff on Twitter, I've been putting up the dynamic time projections from this same program. Now, these are slightly different because, it gives you a visual of when timing comes together. but it uses calendar day counts rather than trading day counts. So the dates will be slightly different than when I do them, the cycles outright. But in this case, what we did, and this was S&P Cash Daily, and, the market was doing great. And right over here, when we started rallying, I wanted to know when there might be time resistance to the rally. And here it was. I basically had chosen, highs and lows for this chart, to run the projections from. And it gave us timing for a possible high between the 19th through the 21st. And you can see that the actual high was made on the 19th. And so far, it has actually declined slightly more than this. But, that was a huge decline off of some time resistance. So again, just like price work, you also want to know when timing comes in because it could indicate a change. And let's see, I think this is what the histogram looks like inside the program. It will tell you which highs and lows that it ran the work from. And then it'll tell you, where it was projected from and everything else. And you can see that here's the standout dates. You look over here and see which is the highest scoring dates, 113 through 83. These are the highest scoring dates, 219 to 21. Actual high made on the 19th and big sell-off since then. Here's another example of some cycles, and that's this is the NASDAQ Cash Daily. Here I had high to high, August 22nd came in 618. I had another high to high cycle. August 22nd was 100% of this high to high. We had another high to high, came in August 23rd. We had a low to low, came in August 23rd. We had a high to low. It was this high to this low. 786 in time was August 23rd. So we had August 22nd, 23rd as timing. Sorry about that. Oops, I've got to check into my...
Yeah. Guys, sorry to interrupt you, Caroline. I think we should get ready to move to the second link that I've sent on the chat section in like 2 minutes.
I have to put my chart back up, and you have to turn on the sharing for me.
Oh yeah, let me do that now. Yeah, you can share your screen.
Okay. All right, so we're back to this example in the NASDAQ where we had a bunch of timing factors that came together between August 22nd to 23rd. What was the market doing into that time window? Well, it was going straight up into that time window. So we were going to anticipate a possible reversal back down, okay, which is what we got. We had the actual high made on August 22nd, which was directly within this window. And you can see there was a decline of 1537.92 from this resistance. This was NASDAQ Cash. It was a daily chart. But not only did we have, the timing there was also a symmetry projection. This low to high was 2501.19, projected from here for possible resistance. But then we had a similar swing of 2503.51. So these two swings were similar. You have the symmetry. Then you also had a 786 retracement of the prior high to low. So you had time and price come together. So, this was an official trade setup with time and price. And we did see a healthy reversal there. Now, this was another, grouping of cycles. This was in S&P Cash. This was where I had a prior high to high swing. 1272 came in on July 16th. Another high to high swing, 786 came in July 16th. I had another high to high, a small swing, 100% came in July 17th. If I use really small swings, I only use like the major ratios like 618 and 100% and 1618, because otherwise there's going to be timing every other bar, which is not helpful. We also had a low to low cycle, 618, July 18th, and another low to low cycle, July 15th. Another low to low cycle, July 16th, and another low to low cycle, July 17th. So we had the 15th. Originally, I had this incorrectly. It was 16, 18. It was the 15th through the 18th. Market went was going straight up into this time window. The actual high was made July 16th, followed by a decline of 550.41. Okay, from timing, we had 1, 2, 3, 4, 5, 6, 7 cycles. When you have that many cycles, you pay attention. It's not always going to turn the market, but it's always worth watching for when it does. So I think that might actually be, yeah, that's the last of that part of the presentation. So I'm willing to take questions now. And also I do have a couple of charts that we could possibly look at, but somebody might have to retype the question that they had earlier.
Yeah, I think they were asking about an illustration on clustering.
Okay, well, I'm not sure if they came back in or not. So I don't know exactly what that question was. I guess, are there any other questions, while you have me here? Otherwise, I can just kind of give you an example of like a current decision. We also have, this market has been pretty ugly, but I do have weekly support in the S&P. This is actually the continuous contract because you don't have enough data with the regular S&P futures. So I have support there, for example, and I also have, I use the S&P cash chart for the timing, and I also have some timing factors, 11th, 12th. We're in that window right here, right now. So we do have time and some price work and some timing that are suggesting a bounce. But because of the fact that all of these moving averages are on the side of the bears, means that initially you're only looking for a counter trend bounce, and you have to be prepared for possible failure at any time. So that's what we're looking at next, as far as the 11th, 12th in the S&P futures, and then as far as the continuous contract, I do have support right there. If somebody got a trigger, since it's counter trend, one of the things to do would be to get to a break-even stop as soon as possible. So that's what I'm looking for there. NASDAQ has similar, we've got weekly support, NASDAQ cash, and NASDAQ cash. I have the 12th, 1, 2, 3, 4, 5 cycles on the 12th. Now I always look at these cycles like plus or minus a day. So the actual window would be March 11th through the 13th. But again, it just gives you the heads up to anticipate a possible bounce and reversal.
All right. Could you take us through an example where you have traded Forex with the Fibonacci ratios?
Forex?
Yeah.
I don't really have the Forex data. I would only have, let's see, I'll show you what I have on my other workspace. I only have futures. So just, I don't get the actual Forex data anymore. Right here, let's see.
Your voice would be heard, So I wanted to ask you, like, when Bollywood stars make statements like Malika Sharaut recently made a statement at the card, very interesting. Yes, yeah, that India is a regressive and aggressive place for women to be in. So very bold and a very extreme point of view. So being a Bollywood celebrity.
Okay, I'm not sure what's going on in the background, but
yeah, I think let me mute.
Oh yeah, somebody's got their microphone open that shouldn't. Okay, there we go. All right. Like the only thing I have is here, for example, this is the the euro, but it's euro futures. But here's like an example, like you can see that over here on the left-hand side of the chart, is a pretty bearish pattern of lower lows and lower highs. And then we started to see a shift. We took out a prior swing high, we held the pullback, and then we shifted to higher highs and higher lows. But what we would have done at this point when it started pulling back, since it shifted to higher highs and higher lows, is we would have set up the pullback here. So there would have been a projection here. Looks like we were slightly through that. Another projection from here that comes in a fair amount lower. Another projection here. And then we would run any of the retracements and see what might overlap. Here we have a low to a high. there would have also been an extension like this low to this high. So, it went slightly through this area, but you can see that there's 1, 2, 3, 4, like 5 price relationships with, 1, 2, 3. Yeah. I mean, a couple of extensions or tracement and some symmetry. But that's the type of thing that we would set up. Now, right here, right now, I mean, you don't really have enough of a pullback, but, we would start running the projections, from the new high, looking for maybe the next pullback. But again, it can be pretty tedious because I have to run, a lot of these prior projections, then I have to run all the possible retracements and all that good stuff. So it takes a while to get, a chart updated. There's, certain charts that we just have, or we watch every single day. So we just have to add every time we make a new high or low. I do have to check into I'm leaving on a flight tomorrow, so I just need to check in real quick. If this, come on, just let me in.
All right.
Let's see if while I'm logging in to do this real quick, you can see if there's now. Come on, I want to check in. Need to check in. Retrieve. Okay, it's too early for me to check in. All right, anyway. All right, so somebody saw this a long time ago, and oh yeah, well, the time analysis in Thinkorswim, it's pretty it's kind of messy when you do it in there. It is doable, but honestly, this program makes it so much easier for me. It's pretty clear to see. But you could still run these and write down the dates. It's just that it just looks a little bit sloppier on stuff like Thinkorswim, or also I believe they have some timing on what is that other one? And I forgot the name of it.
All right, guys, you can ask Caroline any questions you may have during the Q&A session. We're on the Q&A session. Maybe you can tell us if people would be more interested in your analysis and your work. I know you have a YouTube channel. Where can people go?
Yeah, the YouTube, I'll just type it in. I just changed the name to Queen of Fibonacci for my YouTube, but my Twitter, or X, or whatever you want to call it, is Queen of Fibs. Okay, so that one, with the check mark, and I do post my YouTube videos on there and some charts here and there, so you can check those out. I do have, my work is in it, basically a trading room with ElliottWaveTrader.net, and that's where we'll do like 8 charts live each day, and then I do the end of day video and go over everything else that I'm watching. For example, like in this workspace, I've got Microsoft weekly and daily chart. I've got Meta on the weekly, because when we have big swings like this, you do have to back it up and go to the weekly. I'm looking at Bitcoin. I do have to run the new resistance there. And just, every time the market gives us a new high or low, I have to recalculate levels. So it definitely keeps me busy.
Okay. Thank you so much for this analysis. And so for your trading room, do you have a subscription service that people pay for?
Yeah, they can do two weeks free without a credit card. If they go to, I'm going to type it in because you have to have 2 T's, ElliottWaveTrader.net. You can basically do 2 weeks free. You don't even have to give them a credit card. So you don't have to worry about this. Okay, it looks like in 1 minute I'll be able to log in. But that's how you find us. And you basically come into, the charts will be inside a Zoom room, but the actual chat part of the room is on the Elliott Wave Trader site, and there are videos on my YouTube that basically show you how to get in there and all that good stuff.
All right. Thank you so much, Caroline. Maybe
Welcome.
as we okay.
Yep. And yeah, if there's any questions, I'll just give you my email in case there's
Yeah, and I'll link it in the show notes as well.
No
You may
worries.
also send me your updated trading bio because I think it's been so long since we spoke to you.
Yeah, it's well, I mean, I'm semi-retired now, but basically I have the girls run the actual charts and doing that chart work for me in the morning. I do some extra charts and then I do the end of day video. I'll just have to see what they have now for like the expo, Traders Expo and stuff, and I'll send it to you.
All right, thank you so much. Maybe in the your last trading tip for our webinar attendees who will watch this maybe on our YouTube.
Yeah, I would say that one thing is I like to trade on the side of the 513 EMA combo on the daily chart. So for example, if here's the 513 combo, if the 5's below the 13, I mean, here's where you're going to focus more on the sell side rather than the buy side. Versus over here, where you had the 513 in a buy mode, okay, then the easy trade was on the buy side. Now it's not going to be 100%, but it's going to be very helpful if you watch, and ideally trade on the side of the 513 on the daily chart.
All right, I'm so glad we did this. I'm sure guys will get some wisdom from your Fibonacci analysis. Thank you so much,
Yeah,
Caroline. Yeah,
you're welcome.
we hope to have you again for a webinar in the
Yeah.
future when your time allows. Okay, so there's one question that's coming in. Where do you put stops, and do you have trigger stops?
Yeah. I'm sorry, I missed the last question. What was that?
So RLM is asking if you do use stop losses and if you have trigger stops.
Oh, well, the stops will typically go, above or below the cluster. So for example, this chart right in front of you is the USO. If you got a sell trigger against this resistance, where's your stop? Either above the high made prior to your sell trigger or above the high end of the zone, which is above 73.61. The zones define your risk.
Yep. So that's well answered. Unless we have any other questions, I think we've come to the end of the session. Yeah. So RLM is satisfied. Yeah. So thank you so much, Caroline. See you in the next one. And also,
Thank you.
during your traveling I see you do a lot of seminars and whatnot. Yeah. If we have like our sponsor broker partner for like a trading workshop, would you be willing to come to Nairobi for that?
Honestly, I do not like long trips. I'm finally going to take my first one to Italy because I'm half Italian and I've never been to Italy. But honestly, I don't know that you're going to get me to travel that far.
Okay. No
I
worries.
I just don't like the long flights really get me. I mean, it's much easier to get me here
All right.
online.
Okay, no worries. Yeah.
Okay.
All right.
All right, great.
We'll definitely have you as a repeat guest in the future. So thank you so much
Okay.
for your time. Yeah.
All right. Thanks for having me.
All right. Thank you guys for attending as well. I'll send you the edited link once we upload it on YouTube.
Okay, great. Thanks.
All right. Bye.